Good morning. I just decided to do a quick video kind of showing what it's like to trade using this database and this statistical information to calculate entries and place targets. So I've been having a lot of success with it. It's really fascinating, teaching me a lot about kind of the underlying ways the market moves and how it's sort of designed to move in certain directions, and because it repeats and it's a pattern, even though it seems random at the time, if you have a database that tracks 20 years worth of the movements, it's able to correlate that information in a way that makes it usable for day trading. So what I'm going to do is I'm going to use the replay feature and back up to the beginning of yesterday's New York session. So this was Asia, London, New York is getting ready to open right here, and I'll show you just exactly how it is that, that this is used. So we'll start it. It's going to tick through the candles. It's going to build the DR range in the first hour of these 5-minute candles. And that's these lines right here. They'll expand as price moves. The red line is the IDR, which is the implied defined range, and it's going to mark the highest body, and the white is the, let me pause it here, the white candle, or the white line is the top wick within that hour. So if you zoom in, you can see that the red line is defined by the highest body in the hour, which is this shaded box. This is the first hour of the day. And then the white line captures the highest wick. So in this instance, it was the same candle, created the highest body and the highest wick. Down here, sort of a similar situation. Here's your highest body, or lowest body, and then here's your lowest wick. So this is the range that's created. The first time a candle closes outside of that range, which would be this candle right here, the wicks aren't closes, it's just highest price. Once the candle closes above that, you have a confirmation and you get this little green arrow. So at that moment, you pull the DR Lens database over and you filter it. So we're going to filter by yesterday, we want to filter by day and by Friday. And we want to get the confirmation time of day, which this confirmation happened at 11 o'clock. So we get the DR Lens database, we filter it to the New York session by day on Friday, and we're going to filter by 11 o'clock. Okay, so my confirmation happened between 11 and 11:30. As of right now, the DR rule is unknown. Well, by the time, I'm going to go with true because it's true until it is proved false. So for it to be proved false, it would have to go through the bottom end. So as of right now, it's a true confirmation in the long direction between 11 and 11:30. So then that gives me this information down here, which is just amazingly useful and accurate. I'll start with the median standard deviation extension is 1.4. So we have to get our standard deviations. And the way we do that is we pull a Fibonacci, which is just a tool in TradingView. And we measure from IDR to IDR. I put my zero line in the middle. Okay, so these green lines are now standard deviation extensions from the DR IDR box. So this is a half, this is 1.5. It's measured from the IDR. So even though it says 1 here, since my 0 is down here, really my 0 should be here, but if I did that, I'd have to switch it for downside and upside, so I just put 0 in the middle, and I know that this is 5, 1, 1.5, etc. So what DR Lens is telling me is I'll have a median standard deviation extension of 1.4, and my max extension median time will be 1450. So right now at 11 o'clock, I'm going to go mark my 1450 time, which is right there, 1450. And my 1.4 would be half 1.4. I'm going to say right there, approximately. If that's 1.5, that's about 1.4 right there. So this is where I'm expecting price to go. That's not to say it's not going to dip up and down, but knowing that there's a good chance that price is going to hit here at this time gives me the ability to look for entries. Definitely, I know it's going long. It's been confirmed. So for this day, there was a 94% chance that the DR would confirm, which just means it would break the DR range. But there's also an 88% chance that it might retrace back into the DR. So there's a good chance that it'll come back some. But overall, by 1450, I expect to see price hit this target. So we will play it forward. I'm looking for a retracement back to the DR range or so for an entry. It's just consolidating right now. Right there. So on this move right here, when it rejected back off of the DR, this would have been an optimal range to an optimal place to place an entry. And what's so great about this is the stop loss is just going to be a couple ticks below the DR. These lines, the DR, the IDR, the opening line, they act as support and resistance in a way. Price will bounce off of them, reject. They're just areas of interaction with price that you can sort of count on. So I'm going to place my trade. I'm going to put my stop loss 2 ticks below the DR. I'm going to target my 1.4 and my stop loss. Wait a minute, my trade is going to start there. My stop loss a couple ticks below. We'll go a couple ticks below the IDR. Okay. So that is a 13-to-1 trade. That's like unheard of. I mean, people aim for 2 and 3R. 4R is amazing. 5R is ridiculous. But yesterday, people took this trade and they hit big. It even went a lot higher, but yesterday was a big day for options expirations, so that made it go farther than it probably would have under normal circumstances, but the data was still pretty good for right here. All right, so that would have been a good normal trade setup using this data, knowing back here that price should make it up into this area, then kind of waiting, looking for an entry point. Obviously, there's nothing really here to enter on, but when it comes down here, gets close to this line and rejects off of it and starts going the other way, that's when you would definitely get in with a very small amount of risk and then see how it plays out. I mean, if you don't think that's amazing, I don't know what to say. I mean, I'm just flabbergasted that this works like this. I mean, I've been messing with this for 6-7 months now and haven't come across anything that's even remotely close to this as far as accuracy. You know, nothing really tries to predict where price is going. I haven't come across anything that uses these statistics. It's all indicators and trying to use averages, which is really all just a bunch of lagging indicators that tell you where price has been and what price has done to to try to give you a feeling what price might do, but there's nothing really sure about it. A lot of, it's hit and miss. And this will be too, because none of the statistics are 100%. But just from testing here recently and seeing a lot of the other people that are using it, there's a lot of success. So I'm really excited. We're just now really getting started learning it. The guy that put it out has started an academy, and he's releasing more and more information, different ways to use this database, and some indicator tools. Like this thing here is all an indicator tool that he built that predefines all these lines, so we don't have to try to draw them. After an hour, go find the highest wick, highest body, draw it all out. All this comes in automatically, and it's very programmable. Here's all the setups for it. This is just for this one indicator. It is very customizable. There's a lot of different things you can set up on it. It's just amazing. It also put these retracement deviation marks in here, so on days when it says there might be a max median retracement right here, 0.2 median retracement after the 0.5 standard deviation is reached is negative 0.3, so then you would use those lines to calculate how far back into the range we expect it to retrace. And that's also good for targeting. When it says it's going to retrace, 0.3, and you go here and here's your 0.3 line. When it hits 0.3, you place a trade and you put a real tight stop loss there, because you're believing that statistically the averages tell you that most likely it's going to reverse at about that place. So you give it a little bit of leeway, but that's just miles away from what I'm used to trying to do as far as finding places to put stop losses. You got to go down here and drop below a recent range. You don't really know which one's going to hold. You might have to drop all the way back down here to be sure, because you don't have any kind of confidence built on the statistics of what it's done over the last 20 years or so. So anyway, that's it. I just wanted to show you kind of what I've been doing. I've been showing Facebook posts about this DR, IDR stuff, but this kind of gives you a good explanation. And for those of you that are kind of interested in trading, you'll probably appreciate the value of what having something like this is. So. All right, have a good one.